Unmesh Sharma is our special guest in the studio on this edition of India Market Close. He's head of institutional equities at HDFC Securities, and we couldn't have thought of a better time than to have him in. Unmesh, first of all, thank you for coming into our offices. Always a pleasure to have you here.
No, it's a pleasure to be here.
Yeah. And what a day, what a good day to have this conversation, considering that the market seems to have shrugged off some of its sulk. Having said that, how cautiously optimistic are you right now of this, holding on for some time? Because people are hurting out there.
Yeah, I think what's happened is that even in a bear market, you do get the occasional rally. It does feel like it's one of those days.
Oh, okay.
I think also what's happened is that in the last few days, the expectations in the near term around the rates have changed. So there's a little bit of that. I think what happened was that once, this is the week where all the central banks are going to come and hold rates, which has been, something which has not happened for a while, right? So if you see what happened two weeks ago, the expectation was that there will be 2 rate cuts in the US. Now it is like 3. So I think the market's kind of settling, getting used to what's going on. So before the next Twitter feed hits and something goes wrong with tariffs somewhere, for the time being, I think the market's just taking a breath of relief, let's put it that way.
I think it's Truth Social now, Unmesh, not so much Twitter.
Oh, yeah. Yeah, true. True. I think I'm very old school. I'm even calling it Twitter. I think it's called X now.
It's X now. No, so just on that point, actually leads perfectly to the next point that I wanted to ask you about. On how outsized will the impact of what's happening internationally continue to be on Indian markets? Because look at what we're expecting in just the next 48 hours or 48 to 72 hours. Tonight, there's a call between Trump and Putin.
Yeah.
You may have, and he's promising, but you may have some end to a war which has gone on for over 2 years.
Yeah.
The reverse also may happen. And then you have this Fed meet. All right, they'll go ahead with a pause, but important to see what they're saying. Is this going to be the big factor before our own corporate results hit and maybe a bit of reality check there?
Yeah. So I think let's divide the market into 2 parts. Okay, the Nifty is what everyone looks at.
Yeah.
The impact on Nifty is very clearly now driven by macro factors. So is this a macro world? The answer is overwhelmingly yes. Okay, India to a large extent, if you see the way it was in the last few years, was driven by individual corporate earnings. And then what was happening in India, I think that it's now being primarily driven by what's happening globally. And that's not only true for India, but all emerging markets and maybe even some of the developed markets. So it's become more important sometimes to actually watch what's happening in the feed overnight. And you wake up to news and you realize that something new has happened. And that's what's driving sentiment globally as far as risk on, risk off is concerned. But if you look at the small and mid-cap pack, I think continues to driven and have an equal balance between what's happening globally, but also what's happening on flows domestically, as well as what's actually happening on the individual companies at that ground. So I would put a nuanced view to it, but overwhelmingly large number of investors and viewers would be looking at the Nifty level, and that is being driven in the macro environment, clearly.
Okay. So, I mean, we've spoken a bit about macro. I want to try and understand your view with regard to small and mid cap. You spoke at the start of this conversation, you spoke about how this could be a rally in a larger bear market.
Yeah.
Is that your real view? Is that the sense that you're getting? And if so, what's keeping you skeptical?
Yeah, so on small and mid cap, very clearly, I think that whatever has happened in the last few days is a bear market rally. I feel that there is 3 things which could drive another downside. Now, they may not play out, but the odds are in favor of that happening. The first is that if you look at the valuations in the small mid cap, despite the correction of 20-25% from the peak in the mid cap index or the small cap index, are still 20 to 25% above the long-term mean. And when I say long-term, I'm looking real long-term, which is 10, 15 years and not the last 5 years. Okay, so you put that into context. What that means is that a lot of these valuations are driven by liquidity, and the domestic liquidity is what was keeping it up. So technically, now what is actually happening is that every time a domestic investor sells, more likely to have an impact on small mid cap. So that's one. So we have to keep a very close eye on what happened in flows. Now, March is usually not a good month to keep an eye, because all your RMs and all your investors are saying that, what, for tax reasons or other reasons, let's not book any profit now. So we'll see what happens in April. The second is that small mid caps usually driven by micro events, which means earnings becomes very critical. Now you look at what's happened on earnings. last quarter, and I'm looking at the trend,
Sure.
we cover 270 stocks in HDFC Securities. Only 30% have beaten earnings.
Got it.
And now we obviously end up covering like a whole lot of small and mid-cap names. I believe that the downgrade cycle in that has not really come through as such, and maybe this is the quarter in which we will actually test out whether the earnings are going to come through or not. Because when valuations were that high, almost every analyst and was looking 2 years out and actually had raised earnings estimates to a point where let's see whether they play out. I believe that there could be downside on that. And the third is, which is related to the first point, is that at this point in time, while the February was a little soft in terms of mutual fund flows, we really haven't seen any redemption cycle. Now, I hope it doesn't happen, okay?
Sure.
But when you have a set of investors who've not seen returns even in SIPs for a year or two, and when the economy is kind of slowing down, so you need some money to pay off your real estate loans, you maybe, fixed deposit rates have gone up. If you put all that into context, there is a chance that you may see some redemption. It may not happen at the net level. What may happen is the mutual fund industry as a whole can continue to receive inflows, but the shift may happen from small mid-cap to large. Now, these schemes have become large, okay? Some of these mid-cap schemes are like 70,000 crores, 50,000 crores, 40,000 crores. You get 10,000 crores out of that and put into large cap, the aggregate number will look okay, but you could get some sell-off in the small mid-caps maybe after the next result. So I think we'll wait and watch. I think that this is a bear market rally.
And therefore, would you say that you're a buyer in large caps, or would you avoid that space as well? You've spoken about small and
so we are brokers, you are buying. Okay.
What are you telling people who are calling you up? Actually, Unmesh, that's what we want to know.
Absolutely.
when you're getting all
and
of
what
this,
do you avoid and what do you buy?
Yeah, I'm sure you're getting a lot of calls that you're fielding right now.
Yeah, all the time.
Yeah.
All the time. No, so look, I think risk off is the place to be. It shows up in our model portfolio as well. Honestly, to give a bit of background, we have been cautious since September. In fact, that's our published view, right? And it was quite painful because the stocks kept going up and you get cautious. People don't like losing opportunity. They are okay to lose money. They are not okay to lose opportunity. But then luckily that's played out, right?
Till they start losing money.
Yeah, till they start losing money, then they come and ask you, now what do I do? Like I told you so,
Sure.
but anyway. So, okay, on a serious note, I think what we are doing right now is we think that you should get cautious. You have a lot more on the large caps, lot more domestic, whatever cannot be impacted by global phenomena, not so much dependent on exports, basically. So if you look at our model portfolio, it's very heavily skewed towards domestic stories like industrials, real estate, because of the tax cut, so there's a little bit of a boost there. Consumer discretionary, large banks. Now, large banks is a trade which has not really played out, but at the same point in time, we still believe that that is the place to be even now.
Large banks, but NBFCs as well? Or
Look,
the rest of the financials, you're on the...
Yeah, so look, outside of the large banks, what happens is that invariably from the smaller banks onwards, okay, you are also looking at a slight slowdown cycle, okay? So you put that all into context, what will end up happening is that analysts have started flagging off pockets of stress, okay? Like microfinance is well known, right? SME is kind of getting there. There are pockets where there is a stress over there. What we believe is that large banks being granular and widespread gives you protection. If you are looking at NBFCs, then you really need to dig into what is the quality of the book, where is the lending happening, and specifically. So what you would want to avoid is maybe at the small and SME, microfinance, of course, I don't think I need to say that, and on non-granular retail books, we think that there could be some stress there, so just avoid those. You want to go retail and play that, I think the capital market and insurance inclusion story still remains interesting. Okay, so we have an overweight on MCX, for example, which is an exchange, right? Or you have life insurance companies like SBI Life. So you can play the retail story that way instead of trying to go into the lending part. Large corporate is like great shape, so large banks kind of more skewed there. We believe that that's how you would build your BFSI portfolio.
So if you want to build I wouldn't say Teflon coated portfolio, but at least a heat resistant portfolio right now, and I think that's the need of the hour, would your discretionary consumption theme remain or get skewed out?
Oh, no. Discretionary consumption is overweight for us.
Yeah.
A heavy overweight. I think it's probably the most overweight sector that we have.
Yeah, so the platform company variety or more now, your high-end jewelry, I mean, just give us some color on what you're liking.
So what we have is, so jewelry, because you asked the specific question, we have to keep an eye on whether the profits are coming from gold inflation or it's coming from actually making money by having margins, right?
Yeah.
So I don't think gold is falling, that's not the point I'm making, but you want to know where the money is coming from. But if you look at our consumer discretionary, we have even real estate in there. So Soba is in there. There is some media. There is some things like Compton Consumer Retail Avenue is there, and then we also push the first derivative of that, which is EMS. So you are basically playing how do you reach the consumption basket, and this is broadly where we are. We are also overweight on autos, but that's a little bit more skewed towards the fact that rural is going strong for the time being. So consumer discretionary and rural consumer discretionary is basically how we are playing it.
I'm assuming you're not excited about EVs right now, or are you seeing any, I'm just wondering, this whole Tesla, then BYD, what is your take on the M&M Tata Motors EV story or that leg of it? Already priced in, discounted?
See, M&M, Maruti as well as generally on EVs, one is that just like any other part of the world, what we are noticing is that two things, and it's a nuanced answer, so just bear with me, is that on the two-wheelers, it's a little bit more obvious because it's easier to charge, easier to put into some garage and something, and it's a direct replacement. As far as the EV infrastructure on the four-wheelers is concerned, globally, things got a lot more excited and then kind of slowed down with the exception of China, because that is more driven by the government. But if you look globally, this is what has happened. The second is that if you look at the experience of what's happening in the US, where the first EV ownership cycle has ended, what's happened is that actually the residual value of the EV has been quite poor. Nobody is really buying those, let's put it this way. So your second-hand car market in the EV space has collapsed. As a result of which now everyone's kind of evaluating what to do with it. So is EV a real story? Answer is yes. Okay, but till the time the critical infrastructure comes about, it's always going to remain a localized story. I think that very impressively, the local manufacturers like especially Mahindra, for example, has got it right that they are going slow, steady. They are building their own product, which is a lot more, domestic, and they are not building a very big hype story around it. So at the bottom end, I think that the Indian manufacturers, Tata and Mahindra, will end up doing very well at a pace which is not going to be as exciting as what you thought. BYD, Tesla, etc. are more at the higher end, even though, even if the tariffs do get cut and, you can, even if that happens, I think that's a longer term story, affects the top 10-15% of the basket. So from a stock market perspective, I think the story is more in Mahindra and Tata in EVs than actually in what happens to BYD and Tesla.
Unmesh, curious to know view on IT, and I want to go a little bit granular on this one. Yesterday, you had Citigroup come out and say they're going to hire locally and reduce their reliance on subcontracting. That may impact some of our IT players in a big way because BFSI as a segment is obviously the largest. Curious to know how you look at it. 3 rate cuts plus all of this playing out. Is IT a good play? We've seen a decent correction as well.
Okay, so this one, you have to break up IT into two different things. One is what happens to the large IT players, which is basically the Infosys, Wipro, TCS, HCL. And then what happens to maybe what you would call the tier after that. I think what's happening is on the lower tier, it's a little bit easier because you basically need to know who is skewed to the IT trends like AI. Because that work is always going to keep getting done.
Correct.
On the larger ones, I think there is one very interesting thing. In fact, I was in the US last October, and what I noticed was that a lot of very large campuses of Indian IT companies have come up over there. The reliance of these companies on the visa regime is basically a lot lesser than before. At the same point in time, you have to understand that there is a global wave which is happening on on everything kind of becoming a little bit more isolated. That's not just in IT, that's globally. And I think a lot of American companies are more likely to give statements saying we are going to do a little bit more locally because it just works for the local politics there.
Yeah.
Okay, so that noise is not going to end for the next 4 years. What I think Indian companies have done very impressively is that if you look at Trump 1.0, is that they started hiring a lot more in the US itself.
Yeah.
So I think we'll be fine. The only problem is that there will be a lot of noise on the way. So on all four, we have an equal weight position, which is like stick to the index, do nothing. On the large ones. On the smaller ones, we are very granular as to who does what.
Well, trying to tread carefully. Great insights, Unmesh. Thank you so much. Always so much fun speaking with you.
Thank you.
On, Indian IT, the interesting thing, there's this new software where if you have a call from an Indian call center, it changes your accent so that the American on the other side doesn't feel disturbed. So as terribly racist as it sounds, it's solutions that people are finding to, navigate this time.
Absolutely.
Great to have you here, Unmesh. Thank you so much.
Thank you. Thanks.
Yeah.
Thanks.